Welcome again to What a Time to Be Alive. Today, we'll explain why real estate has always been the preferred investment for accumulating wealth, by giving you 12 reasons why real estate is the best investment. So let's get started. Number 1. Fairly easy to liquidate. Although it's not as easy to liquidate as your stocks, due to the high demand, there's always someone looking to buy. On average, it takes the average person between 60 to 90 days to sell a house. Although that sounds like a lot, it really isn't when you think about it. Not to mention that if the cash need is urgent, you could take out a mortgage or refinance the place. All of these reasons should get you thinking. We actually recommend you check local real estate websites and find out just how much money an entry-level property like an apartment or duplex goes for in your area. Plus, then make a plan for the next couple of years to be able to get yourself there, one property at a time. Number 2. Diversification. When people think of real estate, they picture an apartment or a duplex, rented out to a single family. There's more to this story. There's a plethora of options when investing in real estate. Single family, like an apartment; multifamily, like a townhouse. Apartment complexes, this one's pretty self-explanatory; short-term rentals, like Airbnbs. Hotels, you've most likely stayed in one before; commercial, like owning the space where the bakery next door is. Commercial complexes, like owning a shopping mall. Office buildings, companies moving their employees; in industrial, owning the space where plastic cups are being made. And these are just the most common ones. Although similar, they behave differently, have different needs and different price points. Number 3. Easily transferable to kids. This is another big one for those of you looking to build legacy wealth. Real estate is easily transferable to the next in line; the infrastructure is there. In most countries and states, there is no tax on inherited property. Let's do the math, shall we? If you do your job well, buy some properties, leave it to your kids. They don't screw it up and instead manage to acquire the same number of properties as you did, but the time the third generation comes around, the rental income coming in from properties should be more than enough to cover their living costs. All they have to do is not screw it up. This is the reason why the richest families in Florence in 1427 are still the richest families in Florence to this day. They own property and land, they diversify by investing in businesses, and the fortune keeps growing. Number 4. Easily insurable. Insurance companies are all over the world. Every property, every piece of land can be insured. There's an entire infrastructure around the insurance of real estate properties, with insurance brokers competing against each other for the best rates with the highest coverage. With your property insured, you're sleeping well at night as your tenant is covering that cost as well. The main reasons why you should insure every property you own are: 1. Protection from property damage. Natural disasters happen, be protected. 2. Reimbursement for lost items. Theft and break-ins happen, be protected. 3. Protection from lawsuits. People will try to sue you for any reason whatsoever, be protected. This ability to protect your investment from harm makes real estate one of the best investments. Number 5. Tangible asset. Many investors believe in seeing and touching their investments. Some people look at crypto and stocks as imaginary money. For those people, real estate is by far the preferred choice. You simply can't go wrong with owning land and properties. In case of emergency, you could use it personally as a residence or office. The fact that it cannot be stolen, hacked, and more is also a plus. Traditional investors prefer tangible assets with a steady return over high-risk, high-reward alternatives. Number 6. Other people pay for your investment. But let's say you don't want to do all these financial acrobatics and instead want to settle just for ownership. All you have to do is to make sure the income coming from the rental property is greater than the mortgage plus supportive expenses. Here's how the math breaks down. You put down $20,000 for a $100,000 property, with the remaining $80,000 mortgage for 30 years. The property rents out for $1,200 per month. Number 7. Refinancing. For most people, refinancing seems limited to getting another credit to cover a previous credit. Real estate investors do that as well. When interest rates drop, they go to a different bank, take out a credit, pay for the previous one, and now pay less than they used to, keeping more of the rental money in their pocket. But refinancing can do more for you if you're smart. Let us explain it through an example. You search the market and find an undervalued property worth $100,000 that you're able to buy for $80,000. The thing is, you only have $20,000, so you borrow the remaining $60,000 from a bank. Instead of going for a quick sale, you invest $5,000 more into fixing up the place and getting a quality tenant to rent it. You now go to a different bank and ask them to refinance your house. Number 8. Fairly easy access to funding. Anywhere in the developed world, you have access to banks. Banks provide credit if you're employed and prove that you have the means to pay back the money. It's never been easier and cheaper than it is today to have access to capital. Many governments are offering preferred interest rates when it comes to buying a home. Learn about these programs and take advantage of them. In some cases, there's as little as 5% money down on accredited investment backed by the state, and everybody has access to these types of crediting programs. Number 9. Price range. A big issue most people have is that real estate is not accessible, that it's too expensive. Yes, it's expensive if you look at real estate in Manhattan or Paris like we mentioned earlier. But move a bit to the edge and prices begin to drop considerably. You can buy a beachside one-bedroom apartment in Tbilisi, Georgia for $20,000. You can buy a 3-bedroom apartment in Spain for 40,000 euros. Zillow is filled with $60,000 homes up for sale. Number 10. Market cycles. Believe it or not, experienced real estate investors love market cycles. They love it when the market goes down, when property prices drop. Why? Because they can buy more for cheap. While everybody is freaking out, while the economy is struggling, that's when the investors come out to buy, and they buy as much as they can. If somebody offered you to sell you a brand new Ferrari that you know is worth $300,000 for only $100,000, knowing that all you have to do is keep the car in the garage for a couple of years, maybe drive it now and then, and you could sell it for twice that amount if you wanted to, wouldn't you make the deal? Number 11. Passive income for life. Own an apartment in Manhattan or Paris that's rented out, and as of making this video, you can live for the rest of your life from that single rental. Which is why we'd like to put it in a different perspective. We personally know people who've done this and relocated full-time to Asia. People need central housing, and there are no new apartments built in the center of cities. Even when they do, they're ultra expensive and out of the reach of the average person, specifically because these projects are reserved for other real estate investors. Number 12. Tax benefits. Governments really like real estate investors, and they treat them differently when it comes to taxation. Why? We provide housing for the general population and increase value by developing land. This is why real estate investors are called developers. No matter where you live in the world, you'll find that governments treat real estate investors better than small business owners or the rest of the citizens. So that was all in our video for today. Don't forget to subscribe to our channel for more content like this.